What's up, my new people? What is up, everybody? Time to take it a little serious. Yesterday, I gave a pseudo seminar. What I mean by that, we had a gathering of some new traders, some seasoned traders, and we talked a little bit about style. We talked a little bit about what you should be looking out for, but most importantly, talked about what Hit the Biz is going to provide for the active trader. Now, I know you're impressed right now. I'm hungover. I know you guys are too. We went out drinking after our little get together, and we talked and we laughed. And I said, I better make a phone call because the market's going to tank tomorrow. They thought I was kidding. I was actually calling my dad to put some orders in because for some reason my app wasn't working. Why? They asked me. Why are you so confident the market was going to go down? What the market has been showing us over the last 7 weeks, I would say, is that what has changed dramatically is the end of day. The end of day for the last 2 years, the market has gone up. Every dip has been bought. Now, at the end of the day, all we're seeing is continued selling. Yesterday was one of the biggest absolute grinds I've seen in about 2 years. The market did not want to go down. And most of the time, we assume that when we don't want to go down, we're about to explode to the upside. But sentiment, my friends, has changed. And then finally, people read into what Bernanke was saying. I don't understand why it took them 4 hours after the first initial report where he said the economic slowdown is going slower than they expected. That's all you needed. That's all you needed. Now, let me explain to you what my feeling is here in the market. And so far, I've been pretty accurate. QE and all this easing and Fed buying and dip buying and the government supporting the market. When the market has some bad news and it doesn't react as you think it should. Of course, we joke around how it's the Matrix and we're just trying to mess with us. But the reality of it all is that the reason the market wasn't going down on bad news was because there was always the government there to support the market. Now that the easing QE2 is supposedly going away, the market will now react to the news probably more closely to what it really should be doing. That's when I talk about how reality is actually starting to creep into the market. Reality wasn't a part of the market. I mean, obviously, there's a big disconnect between the stock market and reality always. But now, I believe reality will be more of a fist in the face of the market. And we had a really, really weak close. Reality took a while to kick in, but it finally did. We broke the high of the day only just to give it quickly back, and then the sell-off began. That's the matrix right there, trying to sucker the last person in on the long side. Then it would go down. Don't forget the market's always trying to hurt you. So we had that little bump above 55.25 on the Qs, went up to about 32 or 33, and proceeded to collapse. And right there gave me pretty much the confidence to go ahead and stay short overnight. And knowing it was Thursday and normally things go wrong, I figured we were definitely going to go down today. Now that we've gapped down considerably, hopefully we could just stabilize here because I need some sideways action because basically what I've been doing is selling these premiums. So I don't need crashes and tremendous rallies. I need slow days of like what we had yesterday. I'll take that for another 8 days. I know you guys don't want that grind. But I need every day is 1 day closer to options expiration for me. And right now, we're right on the cusp of rolling over again. And we're going to test all those levels again. The nervousness is going to come back. And that's what we're going to do. So right now, also, I'm shorting Bed Bath & Beyond. I'm playing this fade here. I think it's going to go red today. I don't think there's going to be any stocks that remain green, especially, I don't know what they said. I'm assuming they had some earnings. To me, Retail stocks are going to start taking a hit across the board. All those fears of the consumer spending going to be pulled in. Consumers aren't going to want to spend. Sooner or later, we're going to start talking about Christmas, how the season's not going to be as good as it should be. It'll be here before you know it. Well, I'm looking at Bed Bath & Beyond. I dipped my toe in it. Nothing big. Because like I said, since I stopped trading my normal size and gone back to just size where I could just walk away from the computer, I've done pretty well over the last 7 weeks. I really wish I would have gone crazy short yesterday, but at least I stayed short and I got out of these queues. As soon as the market reversed yesterday, as soon as we broke 55 in the queues, there was no way I was hanging on to the. I was long, and I was trying to, remain calm. But there's no reason to be a hero. There's no reason to not go with what's going on in the market. So there was no reason for me to get out. So right now, basically, max profit for me would be a close at 55 on Friday. I don't see it happening right now. I mean, we could rally today, of course, but I don't see it. Max pain, obviously, would be if we fall off the earth. That wouldn't be good. So, good luck to you. I'm looking at Bed Bath & Beyond to go red today. Just a hunch. And just now that we had that nice move up, I'm going to look for some stocks that could sell some premium on. I'm going to look at Priceline again. I'm going to look at the CMG, even though it's the really ridiculous stock to go short. But again, I'm shorting $310 calls. And on the Priceline, I've been shorting the 520s. Google looked like it was going to hang on there. I thought maybe we'd have 1 or 2 more days. Maybe we'd even touch 500 again. But that's rolled over. That's going to maybe test a new low. And if it breaks those lows from last week, I don't, the whole Google situation right now, we've been wondering why the stock has been a weak stock with all the, they make a tremendous amount of money over there at Google. They have so much going on, but yet the market was not respecting that stock at all. So maybe this Oracle lawsuit is more perilous for Google than we know. So maybe it's Oracle we should be looking to buy because they might be owning Google in the next couple of years if they really do prove to be thieves of the Android platform. Think about it. So I haven't looked at Oracle since 1996. I'm going to keep it on my screen from now on. And that's it. And also another thing about when the market is weak and the guys on television, all they talk about is how you can protect yourself. Here's one way: get out. Get out of the market. It's not about diversification when the market goes down. As much as they want to tell you that, no matter what you're diversified in, you're going to lose money when the market's going down. 9 out of 10 stocks will be going down. Chances are you will have stocks that are going down also, whether they're paying dividends, whatever industry they're in. So diversification, as much as they want to preach that that's what you should be doing, the best thing to be doing, stay liquid, stay in cash, and trade this nonsense as best as you can. Suck as much money out as you can on a daily basis, and then be able to go home with no fear, no worries about what the market's going to do. Yes, you'll be upset a little bit with some gap ups and gap downs that you missed some opportunities in cyberspace, but you will be able to remain calm at night and get some sleep and not have to drink yourself to sleep like I do. All right, kids. Have a great day.
I would much prefer Krull.